The credit for Idaho research activities conforms to the Internal Revenue Code definitions of basic research payments, basic research, qualified research expenses, and qualified research, except that only the amounts related to research conducted in Idaho qualify for the credit. The R&D project must follow the federal guidelines for technology-oriented, and while not mandatory, Idaho does expect to see a substantial amount of costs related to experimentation. Since much of the work done on a federal return applies to the Idaho return, it makes sense to claim both credits. The basics of the credit are as follows. The credit is permanent in nature. It does not require annual updates by the state legislature. The R&D must have been performed in Idaho. The credit is non-refundable and must be applied against the state income tax. Idaho research tax credits can be carried forward for 14 years, but not carried back. Normal commercial outsourced contract research expenses are subject to a 65% limit. Research expenses incurred through a university are subject to a 75% limit. The credit may be claimed by both C corporations and flow-through entities. Current year claims are submitted with the current year return. Amended claims are submitted in accordance with standard amended rules. The documentation requirements for the Idaho credit follow the same guidelines as the federal return. The taxpayer must be able to put their hands on receipts, key documents, and financial statements if and when required to support expenses claimed. Extrapolated data is not acceptable. Idaho will not accept estimates when it is reasonable to expect documentation to exist. The following items do not qualify for the credit: general and administrative payroll, supplies not involved directly in the R&D, alternative uses outside of R&D, depreciable property and land, advertising, marketing, utilities, small tools, and shipping costs. Taxpayers must use Form 67 to claim the credit. There are two calculation methods that a taxpayer can select when using Form 67. The fixed base percentage found in Part A and the fixed base percentage for startup companies found in Part B. The fixed base percentage method in Part A is for companies with QREs and Idaho gross receipts from 1984 to 1988. QREs and gross receipts yield the fixed percentage used in subsequent calculations. The fixed base percentage method for startups in Part B is for startup companies. The credit is 3% of QREs for the first 5 years. For years 6 through 10, a statutory rate is used. At the end of year 10, a permanent base rate is calculated. For both methods, the base period must be a minimum of 50% of the current year QRE. The credit calculates to 5% of the excess QRE over the base amount. The R&D credit is capped at 50% of the state income tax. The cap is calculated after all other credits have been applied against the income tax, thereby reducing it. In summary, while the same workup for a federal return can be used for an Idaho return, only expenses incurred in Idaho can be used on the state claim. Idaho taxpayers are not required to file a federal R&D claim with the IRS to file one with the state. Idaho uses two methods to claim credits: the fixed base percentage method and the fixed base percentage method for startups.